We can now go in detail on how to manage production activities as described in the previous lecture using information systems, so in particular enterprise resource planning and SAP. First of all, let's have an overview of how the production process is intended or is kept in the SAP system. As you can see, the process begins with a request for production that can be triggered by another process like fulfillment or material planning. So fulfillment if there is the need to complete a customer order, like in make to order approaches, or instead if after material planning we have a need to increase inventory level when we use a make to stock strategy, we need to issue some activity in our production system. Once we have this trigger in place, the request is first authorized for production, for example, by the head of production or the production supervisor, which release the production in the forms of production orders. So there is a request for production which is authorized and then released in the production system in case all is okay. Here you see that once the production order is released, then there are the activity of good issue, meaning preparing all the goods that are needed for production. Then there is, the realization of activities, the production in the production system, and then there is the confirmation. So once all is produced, there is the confirmation of the realization of the production order. In very few cases, production involves also the use of external system, such as plant data collection system. They are present in organization, but very rarely are used at this level in the production process, because the data collection process usually is less structured than you can imagine. But on paper, production should involve the use of information system like the PDC, plant data collection system, that use data from the ERP system to execute then production in the shop floor. Once the production is confirmed, so all is realized, then the goods are taken and stored in some place, so in warehouses or in distribution center or whatever, and then are ready, as they are completed, are ready to be delivered or to another plant or to the stock or to the final customer. Of course, as you can see here, and we will analyze this in detail, in order to execute this process, several data like master data and transaction data are needed and are also transformed by the production system and production process, and these imply the generation of several documents like financial documents, managerial accounting documents, material documents, and transaction documents. Let's start with the first step, so request for production. A request for production is triggered by the need to produce material. Again, as we already discussed, if the company has adopted a make-to-order strategy, the receipt of a customer order, so coming from the fulfillment process, will trigger the need to produce the materials. If instead the company has decided to adopt a make-to-stock strategy, production will be activated by the material planning process, which we will see in the next module is concerned is concerned with ensuring that sufficient quantities of material are always available to satisfy the market demand. However, regardless the source of the trigger, the main task and the outcome of the request for production is the creation of what we call a plan order. So the plan order is the main document, is the main outcome of these phases, and it is a formal request for production that indicates what materials are needed, how many units are needed, and when they should be delivered. It is something similar to the purchase requisition that we saw in in the procurement model. Here you can see which are the data that are needed to create a planned order. Of course, various organizational data, master data, and user-specified data are included in order to realize a plan order. Of course, the user making the request specify which materials are needed, how many, and when they are needed, and at this point the ERP system automatically incorporates both the master data related to the materials and the bill of materials related to the product in the plan order. So we have information about characteristic of the production, and then linkage also to the main production element that will support production, named the master data of materials and bill of material. The system will use this data together with configuration options that are present in the system in order to then check additional information like order dates, material availability check, and so on. After we have created a plan order, which is simply a request, then we need to authorize production. And the authorization of production creates what we call a production order. Production order is like a contract on the procurement side when buyer and supplier establish a relationship, because a production order represents an actual commitment from the production system to produce a specific quantity of materials by a certain date. Of course, production order needs to include what material will be produced, how many, when, where will they be produced, what resources will be used, how much will be the expected cost. Data regarding resources, materials, work centers, tools will be specified or anticipated in the production order. Again, a production order is typically created by converting a plan order and by specifying all this information. So what before was just a planning now is an effective commitment to realize that product, that materials, using that resources within a certain date. Of course, after a plan order, there is always a production order if there is authorization, but a production order can also be generated without a plan order. This process is similar when we created a purchase order without reference to a purchase requisition, or when we create a sales order without reference to a quotation. So it's the same. If we switch the step, we just go to the creation of a production order without passing through the plan order. These are the data that are needed to create a production order, and you can see that much of these are already included in the plan order, like master data, organizational data, user input, and plan order. I would like to focus the attention on the fact that as the production order need to depict how production will be managed when the order will be included in the system, there is also the inclusion of reference to bill of material, cycle routing, work centers, tools to be used in production, and so on. This is the structure of a production order. As all the documents that we already seen in the ERP system, you see that there is a neither section where main information of the order are reported, and then there are several tabs where you can find details about the order that this document is referring to. But let's analyze this in detail. First of all, let's start with the header. The order header includes basic data such as unique order number, the plant where the material will be produced, the person, name also scheduler responsible for scheduling the production, and the status of the order. In particular, let's focus on the status, because a production order can pass through different statuses. When the order is initially saved, the status is created, name also CRTD. As the order is executed, the order status is changed to reflect its current state and can be partially released, PREL, effectively released, REL, partially confirmed, PCNF, effectively confirmed, CNF, or partially deliver, PDLV, or effectively deliver, DLV. So, during the process, the production order changes its status according to the state of execution of the activities in the production process. Then, a production order also include the specific operation which are needed to produce the material, along with the data on the specific work center through which materials will pass through, and will also specify and identify the sequences for execution of the operation. So, in the production order, you will also find information about work center and routing. Capacity splits are instead used to determine how the work will be performed and distributed among the different machines and or people which are involved in the production process. For example, if you are referring to a job shop, the capacity split will determine where the production to be realized will be allocated at the different machineries present in the job shop. The production order identified also the components needed to produce the specific quantity of materials, and the quantity of materials needed to produce the product are usually obtained from the bill of materials. So materials quantity comes directly from the linkage to the bill of material. Also, we have also detail about possible resources and tools needed to complete production. Finally, and this is something new, we have also cost estimation. A production order includes preliminary estimates for various cost components, such as material, overhead, and cost of labor. These costs are associated with the appropriate accounts in the general ledger, such as material consumption accounts. After the production order will be completed, the cost accumulated in the production order will be settled. Why I'm telling this? Because we will see that in detail, but first, costs are estimated ex ante, so making like a budget, a forecast. Then, during settlement and using settlement rules, the actual cost incurred with the production will be allocated to cost object, final cost value will be determined for our production order. Please note that the creation of a purchase or of production order, so production authorization, generates several outcomes, including scheduling, availability check, reservation, preliminary costing, and creation of the necessary purchasing requisition. Let's start with scheduling. The scheduling function calculates the dates when the various operations will be performed and the capacities that will be needed in the work center. So define the delivery date and also allocate capacity needed in the work center. If the scheduling data in the production order, like for example date, will be change at a certain point of time, thanks to this linkage, the system will be able to configure automatically the order rescheduling in terms of dates and capacity. Then, in addition, the system performs the availability check, which was, the same concept that we saw in fulfillment, but the system check if there are available and sufficient resources like components, tools, capacity, which are needed to execute the production order under evaluation. If they are, the system creates material and machine reservation. So we need these components, these tools, this capacity, and as we have it actually in the system automatically reserve some capacity of these resources to this production order. And according to this, a preliminary costing, so according to the resources allocated to this production order, there is a preliminary estimate of the cost that the organization will incur to realize the production described in the production order. Please note also that if the production requires non-stock items such as consumable items or external operation which are executed by external companies like, I don't know, painting, surface refining, or whatever, these are specified in the production order too and issued to the procurement department. Let's focus for some seconds on how costs are estimated in a production order. When the production order is created, planned costs are determined according to material, labor cost, and overhead estimation, which are copied to the production order. Please remember that when dealing with production, we will refer to planned costs, which are those determined at this level, so at production authorization, target cost, which are the planned cost realized for actual quantity. So planned costs are the cost plan, so the forecast cost for the planned quantity. Then the production order, in practice, will realize real quantity, which can differ to plan one. I was planning to realize 20 products, I realized 22 products. Target cost evaluate the cost of this production using real quantity but planned cost, so budget cost, so the costs that were initially included in the production order. Finally, from target cost we switch to actual cost by evaluating real quantity with actual cost, so the cost of materials, human labor, and capital and overhead in which the companies has incurred in by doing this production. Let's see what's happening in our example. In our example, raw materials are expected to cost $350, while wheel assembly is supposed to cost $230. This comes from the fact that we need two wheels per bike, and each wheel costs $150. So the expected cost of material is $350 of raw materials plus two wheels, so a cost of $230, multiplied by 25 bikes, which is the volume requested in this production order. So we have a total value for material of $14,500. While instead, in terms of labor, we expect that each bike lasts 30 minutes of work of human workforce. Human workforce is paid $50 per hour. So if we transform this in minutes, this means $25 for 30 minutes. So we just have to multiply this for 25, and we obtain $600.25. If we sum up these two values, we obtain that the total planned direct costs, so without considering overhead, in this case are $15,125, which are reported in the plan estimate cost sheet. Then, once the order is authorized and the planned costs are calculated, the order can be released. Once the order has been created, so CRTD, it can be released, so switching to the real state, in order to execute the following process steps, in order then to execute all the activities that are needed to produce, like goods movement, confirmation, realization of production, and so on. Please note that most of the system manage this flow automatically. So once the order is created, is then released. But the system can be configured also to a manual release of order, especially when the company needs time to verify the order or to prepare for production. Because once the order is released, it means that the system is going to process it. So you need to be ready in terms of goods, in terms of capacity, in terms of resources to then process it. And if you're not, you can manage this procedure manually and release the order just once you have verified that all is okay in your production system. Again, a production order can be released at the header level or the operation level, and this decision is also determined by the system configuration. So when the order is released at the header level, all operations are also released. So it means that if you take the document, you can change the status in the header, and subsequently all the operations that are described in the production order will be released in the production system. While instead, if you want to release progressively your order, you can just release specific operations. So you change the status of specific operation and the other one will be partially released, and you will just change the status of the other operation once you will consider your system ready to process these remaining activities. Of course, when a production order is released for production, all the practical and operational production steps can be then executed. In particular, there are a lot of documents that can be created or printed or used in order to support the following step. For example, there is the possibility to visualize or to print out shop floor paper. Shop floor paper will show you how to execute the production step in the different work centers. Like withdrawal slips, which are used to obtain the material needed for production, or time tickets, which are used to record the amount of time required to complete various operations, and operation list, which specify, for example, which are the operation listed and which are their technical characteristics to produce the material. So this is possible once the order is totally or partially released. You can also go on the technical aspect of production by printing out or visualizing different documents related to production. Now, from the administrative perspective, it's all ready, and we can now switch to the physical part of the process, and the first step is good issue. Good issue, of course, to produce we need materials and components, and with good issue these materials and components are moved from storage to the production site in order to become resources for this production order. Of course, the trigger of goods issue is the order release. So once the order is released, the production can take place. This is the input that says, okay, we need to take materials and components to realize this production. Please note that there can be also additional steps. It's not just a matter that the order is released and tomorrow I will have the material. There can be additional steps like material staging, if materials must be prepared to be used and to be processed by the production system. Of course, good issue have different aspects on the process and on the documents because it generates, it impacts financial documents, so it has a financial impact. It has impact on reservations because if you remember with reservation you allocate some materials to the production order, and then of course on final production cost calculation, because now we are stepping in the real world. So from what previous were planned costs, now are actual costs, because materials which are part of the production cost are now taken from the storage and brought to the production line or the production shop. These are the data that are needed for the good issue step. So essentially the system must know which materials or components needs to be issued, the desired quantity, and the operation to which they will be assigned in order to realize the final product. At this point, of course, the only materials that can be issued are those that have been included in the reservation, because, I mean, you allocate materials to this production order, so you are authorized only to take reserved material. And also to assign them to the operation that have been previously reserved and described. Of course, the production order includes already all the data that are needed to execute good issue. You just need, I mean, some user input specificities like actual materials and quantities issues, and also materials quantity and location, planned storage and location where material are stored, which can then be changed once the good issue step has been executed. There are several impacts of the good issue step. First of all, I mean, in terms of financial impact. The material master is updated to reflect a reduction in the quantity on hand and the inventory value of the material issued. This means that some general ledger accounts will be updated. In particular, the relevant material consumption accounts and the inventory accounts will be updated to reflect an increase in consumption and the reduction in inventory. Then material reservations are updated. In particular, reservation quantity are reduced by the quantity of the material issue, because first they were reserved, now they have been issued, so we can free some of the reservation amount. Then because of these steps involve a goods movement, of course, a material document is created to record data associated with this movement. And again, because the general ledger accounts are affected, financial documents will be created to record this financial transaction. Actual costs associated with material consumption are allocated to this production order, and so updating the previous estimates. And finally, a good issue document that includes the materials and quantity issued can be created, even if the good issue document creator is not mandatory, so you can decide to create it or not. Let's review just very briefly the impact that good issue has on the financial side of the company, using the same example as before. Let's start with the actual cost. When we issue goods, we realize that raw materials needed to produce one bike is 369.5. per bike. This means $19.5 more than the planned value. So this means that the total cost of raw material will be this value multiplied by 25 bikes. Wheels instead are kept at the same price level. So we have 2 wheels per bike at the cost of $150 per wheel. This means that the total material cost is $14,987.5. The raw material consumption account is debited by the total value of the raw material issued as well as the semi-finished goods consumption account. So as you can see here, as we consumed raw materials and semi-finished good and wheels, for these values we debit the true account of this consumption. Correspondingly, credits are posted to the raw material inventory account and the semi-finished goods inventory account for wheel assembly issued to the production order, because we increase consumption and we decrease the level of the inventory. So this is an income statement. Account. This is a balance sheet asset account. Then, as the total material cost for production is $14,987.5, this material cost will be debited to the production order as actual cost. You see here the total value of raw materials is $14,987.5, which is the actual cost after goods have been issued from inventory, and these are higher because we paid raw materials $369.5 instead of $350 per bike. Once the materials are issued to the production order, the actual production takes place on the shop floor in the work center. So there is confirmation and production is once the production is completed in the system. Because when the finished goods have been produced, the person responsible to the production order completes the work records by confirming that the work has been completed in the production system, and this is registered in the ERP system. So we can say that a confirmation indicates how much work was completed, where it was completed, so in which work center, and the person responsible to this completion. The data needed to confirm the order are essentially the ones you see listed here. So you need quantities, so you need to know how many goods were produced, how many were scrapped, and how many required rework. Which operations were completed, so which operations were executed and completed, and also if they involved setup and which machineries they involved. Duration, so dates and times when the operation were started and completed, and the overall duration of these activities. Work center, so the physical location in which these operations were carried out. Personal data, so who completed the operation, and reason for variance. So if the confirmed quantity is different from the planned quantity, you need to justify the reason of this variation. Of course, confirmation has different impact. Because when the confirmation step is executed, all the data associated with the execution of the work are, let's say, recorded and finalized in the system. So, first of all, production is defined and consolidated. The production order is updated to reflect the quantity of materials that were produced, the activities and operations that were completed, and the dates when the work was performed. So, when we have a confirmation, the first impact is that we have the definitive production data, and we can thus change the production order status to completely confirmed or partially confirmed, depending on whether the entire order quantity was produced or not. And then, because confirmation indicates that production in one or more work center has been completed, of course, there is also a change in the reservation of work center, which can be reduced as activities have been executed. Finally, thanks to the confirmation state, we can also arrive to the actual cost calculation, because confirmation means all the activities, or if the confirmation is final, all the activities have been executed. So with good issue, we know how much materials have been costed to the organization. With the confirmation, we also know how much labor cost was due to realize this production order. In our case, let's stick with the example that a confirmation is recorded for the 25 bikes. So we realized 25 bikes. But the actual time, so labor times required to build the bikes, was 775 minutes, which means 31 minutes per bike. So 1 minute more than the planned value. The pay rate remained the same. This means that the total labor cost is $645.83, and this value is put as the actual labor value in the production cost sheet. Now we have all the data to calculate the actual cost, which is the sum of the cost of raw materials and the cost of labor. And again, in this case, the cost is higher, and so the total costs are higher than the planned ones, because in one case we have a higher cost for raw materials, and in this case we have 1 minute more of human labor, which leads to higher costs. So the production order has accumulated a total of $15,633.33 for material and labor consumed. Finally, after the production has been completed and confirmed, the materials produced are placed in finished goods inventory. So the production is okay, we have realized the quantities requested in the production order, we put the finished goods in the inventory. This step is accomplished by comparing goods receipt to production order in order to understand if they match. Here you can see the type of data that are associated with goods receipt, the goods receipt steps. In particular, the production order number, the quantity received, the date, and the location, so plant and storage location, are provided by the user based on the completed work. Organizational data associated with the location and master data associated with the material are obtained automatically by the system. While the material master is used to determine which inventory account needs to be updated and how the material will be valued, standard price or moving average price. We already saw that in the procurement part. And it also indicates whether the material can be stored in specific locations or whether there are any specific storage requirements. Again, the goods receipt account, the goods receipt step generates several significant outcomes. First of all, the quantity on hand and the value of the inventory are updated in the material master. In particular, the price control field in the material master determines how the materials is valued, again, at the standard price or moving average price. Then you have an impact on the general ledger account, because general ledger accounts are updated to reflect the financial consequences of goods received. So I have produced something and I put that in stock, in semi-finished, in finished goods inventory. In particular, usually the inventory account which is involved here is our material master, which are debited, and manufacturing output settlement, which is credited. Please, I use the word manufacturing output settlement because this is how it is called in the book, but this is no other than the cost of goods sold of cost of goods manufacture account. So this is called manufacturing output settlement, but it is cost of goods manufactured or sold. Other names to call these are plant activity account or factory output account, but these summarize the cost of producing something. Please remember that if the price control is set to moving average price, the material is valued at the price that is determined by the system based on how the system is configured. And then a corresponding financial document is created. Let's stick with our example. In our example, the target cost is the same as the planned cost, because we didn't change anything in quantity. So quantity were 25 here and quantities were 25 here. So we didn't change the quantities, and so the target cost equal the planned cost. Remember, the target cost calculate the planned cost to the actual quantities. The production order is credited by the target cost. So $15,125. At the same time, the finished goods inventory account is debited by this amount. So this credit the value of the production order cost sheet, but immediately there is a credit, a debit in the finished good inventory account. And similarly, as we increase inventory, we also increase cost of goods manufactured. So we credit the manufacturing output settlement account. As you can see, this movement, these steps, leave a balance of $508.33 in the production order, as we have paid more raw materials and it took more time to produce the bike. This amount, which is the difference between the debits, so the actual cost, and the credit, the target cost, in the production order, constitutes a variance. And we will see in some minutes how to manage this variance. Because this is not a real step in the production process, but it's something that you should be aware of. Several steps related to production are completed periodically during the process. And so we need to include an activity which is named periodic processing, which is an activity which takes place in specific period, such as months or quarter, where companies complete certain accounting steps and updating data in the financial statement according to production process progress and activities. In particular, periodic processing includes overhead allocation, work in progress determination, and order settlement calculation. Let's start with overhead calculation, which is something really accounting oriented. I don't want to go too much on this, but as it was not present in our example, it's worthwhile to spend just 1 minute on this. The production order, in fact, when it is executed in the system, accumulates the direct costs associated with production, like raw materials and labor costs. However, there are other costs that are not directly associated with production, which are relevant and needs to be included, and which are labeled as indirect cost or overhead cost. These are, generally speaking, facility costs such as utilities, maintenance, depreciation and amortization of machineries, or salaries of supervisor and manager, which are not directly involved in the production of work center. These costs are accumulated in specific cost center, and when you run the periodic processing are periodically allocated to the production order based on pre-established rules. Again, I don't want to go much in detail, but if you remember some principle of managerial accounting, these are allocated according to job order costing, activity-based costing, process costing, and so on. So according to the rules of overhead allocation, then when you run periodic processing, overhead are calculated and allocated to each production order. Then we have the work in progress determination. Because when materials are issued to production, of course, a reduction in the inventory of these materials is recorded. However, the finished goods are not completed and placed in inventory until a later point in time, so until they really are finished goods. During this, interim period, we don't have components material because they have been processed, but we don't have also finished goods already made. So what do? We don't have more raw material inventory, and we don't have yet finished good inventory. In this interim period, what we have in our production system, it is what is classified as work in progress or work in process inventory. So whenever the materials are in the process of being transformed in the final product, we have a temporary inventory of work in process. Of course, work in process or in progress is not a significant issue if the production process is relatively fast. So if the work in process remain in this state for a short period of time. This is the case of process like paper production, semiconductor, but also bikes, but also cars. There are instead products such as aircraft, building, or something like this, where production time is very long. It contains months. It takes years. So in such cases, the material used in production are considered work in progress inventory and must be properly accounted in the general ledger. So in this case, you need to include in your balance sheet and in your economic evaluation also a work in progress account which impact the structure and the characteristic of your balance sheet. Again, to accomplish this task, a company will periodically calculate the value of its work in progress and make posting to the general ledger so that the financial statement will accurately reflect the current inventory situation, and economic evaluation of the firm won't be biased. Finally, we have settlement. We note earlier that the difference between total debits and total credits in the production order can generate a variance if there have been variation between planned cost and actual cost. So periodically, or when a production order is completed, these variances must be settled, meaning they must be posted to appropriate general ledger account. In FRICO, our cases, the manufacturing output settlement or cost of goods sold account was credited of a value 15,125, which was lower than the actual cost. So that means that in our case, the cost of goods manufactured account will be credited by the variance amount, as it is shown here. However, in order to balance this stuff, an offsetting entry will be made to a variance account, naming the variance account of the manufacturing output settlement. In order to highlight this variation which has been recorded in the income statement account. Then, last but not least, the very last step of the process is the declaration that the order has been completed. This happens really when also the periodic processing has been run on the ERP system. To complete an order, we can have two perspectives. An order can be technically completed, so from a logistic perspective, and or financially completed, so for an accounting perspective. A production order is set to a technically completion when it is no longer necessary or possible to continue with the production. So in this case, no further execution of the production process steps is possible. So all the activities are closed, all resource reservations that are still open are deleted, any consequences to other processes such as purchase requisition for material needed for production are removed, the materials in the order that is not expected to be produced are eliminated for planning, and so on. So technical completion, which is different from the financial completion. Financial completion happens when the financial posting related to the order, such as those associated with settlement, are finalized. After a production order has been completed from a technical perspective and settled for a financial perspective, it is then set to a closed status, CLSD. To conclude this overview very quickly, also for the production part, we will focus on possible reporting options that we have for production activities. Reporting options for the production process are of course similar to those available for the other processes. A variety of lists, reports, and analytics are available via the production information system, which is a subset of the logistic information system. Here, for example, you see an example of production report that can be generated to identify the status of plant orders and production orders and capacity availability, utilization, material consumption, and so on. In the specific, this report illustrates the status of component or material utilization for several orders. In particular, you can note that materials have been withdrawn. All the materials have been withdrawn for the order number 100002, while instead are still in place for order number 100003. Here instead you have a report summarizing execution which operation needs to be executed for within a same order. In particular, in this case, you can see that operation for order 100002 have been confirmed, and so they will start and end at the dates that are indicated in report, while instead for order number 100003, the operation has still a status of released, but the work has not started yet. Finally, here you can see one of the most important reports in production, which is the stock requirement list. The stock requirements list identifies all the activities in the system that can potentially impact the quantity of the material in inventory. So you list all the activities, all the operations that can modify the quantity of your material inventory. In this case, the figure shows the stock and requirement list for the Deluxe Touring Bike DX-TR1000 for the Dallas plant, DL00. The list in particular indicates that there are no Deluxe Touring Bike in inventory, and it further shows also that there are 3 independent requirements for the materials and 3 planned orders, so I should expect to impact the stock in the near future, given the fact that now Now we don't have material because of this previous planning.